Welcome! In this explainer, we're breaking down a really fascinating financial experiment. We're going to peel back the curtain and show you exactly how a small, consistent investment choice gets made step by step.
So let's dive right in. The experiment is called Money Myths, and it's all about testing some of the most common beliefs about money and building wealth, but, in a super practical way.
And it all boils down to this one question. What is the smartest thing you can do with just 50 bucks? It's a small, relatable amount, but what can it actually do?
To find out, every fortnight, we're taking $50 and splitting it 3 ways. One part goes to a lottery ticket. That's the long shot, right? The second goes into the share market for potential growth. And the third, straight into a high-interest savings account for safety. Same amount, same schedule, but we're expecting very different results.
Okay, so for this explainer, we're going to focus purely on the investing slice of the pie. The lottery is just pure luck, and savings is pretty straightforward. But the share market? That involves making some real decisions. And the very first one was, what tool are we going to use? Which platform? We ended up landing on the BetaShares platform. And the reason is actually pretty simple. The biggest thing? It lets us invest just $50 at a time. A lot of other platforms have much higher minimums. Plus, it's easy to use, it lets you do fractional investing, which means we can own a tiny piece of an expensive share, and we can set up automatic deposits, which is absolutely perfect for an experiment like this.
All right, so with the platform sorted, we got to the really big question. What single investment should we actually buy with our 50 bucks?
After doing our homework, we narrowed it down to a final showdown between 2 very different exchange-traded funds, or ETFs. In one corner, you've got GEAR, which basically tracks the Australian share market. And in the other corner, there's GGUS, which is all about the US market and its giant tech companies. Now here's a really crucial point. Both of these are what's called leveraged ETFs. In simple terms, think of them as investments on steroids. They're designed to amplify the daily moves of the market. So when the market goes up, they're supposed to go up by even more. But, and this is a big but, when it goes down, they go down by more too. So yeah, definitely a high-risk strategy.
Let's take a closer look at GEAR. You can think of this one as the old economy. It's packed with all those familiar Australian heavyweights, the big banks, the huge mining companies, and businesses that are tied directly to commodities. Its fate is really linked to how well Australia's economy is doing and even what's happening in China's economy. Now, GGUS is a totally different beast. This is the new economy. It's just dominated by those American mega-cap tech giants you see right here. Apple, Microsoft, NVIDIA, Amazon, Meta. These are the companies at the absolute heart of the AI boom, a technology shift that could honestly redefine everything, and their earnings come from all over the globe.
Okay, so let's get to the final decision. We've got Australia versus the US, banks versus big tech, old economy versus new. And this really brings us back to how we're making this call. Because both of these are high risk, we had to ask ourselves, which one looks like it has a stronger chance for growth over the next year or so?
So after weighing everything up, we made our choice. We decided to put our $50 a fortnight into GGUS, the US tech-focused ETF.
And this number right here brilliantly illustrates part of the reason why. Just look at that performance. It's returned over 20% in the last year. Now, of course, past performance is no guarantee of future results, but that is some powerful momentum.
So the final decision was really based on a few key things. First, the US economy is just growing faster than Australia's right now. Second, when interest rates get cut, that tends to give a bigger boost to growth-focused tech stocks than it does to old-school banks or miners. And finally, GGUS just seems to offer a higher potential upside because it's driven by all this relentless innovation and stuff like AI that is literally changing the world.
But, making the choice is only the beginning. The whole point of this Money Myths experiment is to see what happens next. So now, we track the results.
Every single month, we're going to be updating the numbers. We'll see the wins and probably a lot of losses from the lottery tickets. We'll track every single dollar of growth or decline in our GUS investment, and then we'll compare all of that to the slow, steady, and safe growth in the savings account. It's going to be a real-world look at risk, reward, and reality.
So could a small, consistent $50 investment really change your financial future? Well, follow along with our experiment as we track the wins, the losses, and everything in between. We're about to find out what 50 bucks can really do.